Hi guys, this is Teacher Party. Welcome to my YouTube channel. Guys, let's share, subscribe, like, call your friends, your neighbors to watch these videos. They should help you because they're all inspiration for distinction in matric. So guys, we are doing the first in, first out method. The numbers you see here is for the weighted average method we did for the 2021 paper. I must put a disclaimer. I have not developed the examination paper. This is I have not developed the examination paper. This is straight from the internet, from the IEB website. So guys, I just want us to practice using those question papers. I usually do 3 examples and then give out the test pack or the exam pack to students so that they work on their skills. Okay, let's do this. First in, first out method. What is it? So it's the same as, okay, it's another inventory valuation method. Instead of working with the average, the first in, first out method, it simply says, like the name, the first inventory that was purchased will be the first one to be sold. So the first inventory to be purchased is the first one to be sold. Let me do that. I'll upload a video on the theory on first in, first out, the concept, what it is, a slide, and then we can move along. So this one they're using, it's still the same company that we read about. I think it was Chloe and Kaylee, CNC Sound. So they're saying the earphones, they use the weighted average, but the speakers, they use the first in, first out method. Okay, so I've cut this part here. It's an IB question paper, November 2021. So it's November last year. Okay, so I want to show you this first in, first out method. First in, first out. So let's just copy this. So this is 150 units. It's 700 rand. Plus 2. Then purchases. Is 450. So here we won't do the average, like where we divide the total value with the number of units, because we're doing the first in, first out. If someone were to buy now 100 speakers, we would say, okay, the cost of sales is 100 speakers multiplied by 700, because we're not working with average, we're working with the cost of the initial purchase. Then May 2021. How many? 500. 600. Then they're saying there was the courage on purchases, so we'll put it at the end. Then they say the 1st of June, they returned speakers. So it's returns. On 1st June 2021, they returned 50 speakers they purchased as they were faulty. So this would have to do with May purchases because November, the opening stock, there was no returns. January, there was no returns. After they made a purchase in June, then they returned. After they made a purchase in May, then they returned 50 speakers. So I would use the amount they used in June. Okay, then they've got purchases in September. Okay. Courage on purchases. They're saying here there is no courage on purchases as orders over 100,000 are delivered for free. So yes, 755,000 is over 100,000. Okay. I'm gonna show you how we did this. Okay, so closing stock. So sales, cost of goods sold. It's 130. Okay, so closing stock. $130. Now they sold 1,130, meaning this whole inventory up until here. It means this inventory, because we're gonna take the first inventory that was purchased, and it's the one that we're gonna sell. Sell anytime we get a purchase. So this means, I just will highlight this right. It means this inventory we can't value using their cost prices because we have sold it. Whenever we got this, we first had to get rid of the old inventory when we got this sale for 1,000. So the remaining inventory is the 260 purchases at 750. So The value of that inventory is untainted. It's 750. So that is the closing inventory. Now they want you to calculate the cost of sales. So it's formula driven. It already brings down your closing inventory at minus 97,500. Opening inventory. What is opening inventory? You were given purchases. Now you take your total purchases, which is this plus this plus this, less returns, $30,000. Closing inventories, carriage and purchases, it's nil. Remember, above the 100,000. So let's do the total. This gives you how much? 732,500 cost of sales. The other method that we could have used to save time, because you won't have time in the exam, is solve for x. X equals to, you're looking for the closing inventory. So in fact, you wouldn't even need to solve for x. You wouldn't need to solve for x because look at this. Né? They told you all the nice things. Your closing stock is 130 speakers. You already know. Okay, so okay, actually you would need solve for x. So it's 130 speakers multiplied by, you know that you have 150 and now you sold 1130. So you just know you would simply do this with your calculator. 1130 minus 150 minus 400, still have a balance, minus 500 is 80, minus 260. Now this is when you start having a remainder of 180. So it means the remaining stock is the last one for September. So you're going to take 750. That's less than a minute for you to figure that out. But I just need to show you the long way so that you understand how this came about. And 7,500. Okay. So guys, like, subscribe, share with your friends. I just want to look at the questions they had here. So we've answered, determine the weighted average, we've answered. You should be getting this 23 marks. It's really free. The owner, the stolen, we've answered. Explain why the weighted might be better suited as a method of the valuing stock earphones. Okay, so I'll have to develop a slide for that. Why? But it looks at the average, which includes every inventory you have. So there's no fluctuation. It's stable. The cost price is stable. Whereas with first in, first out, it's not stable. Cost prices fluctuate. We've done that, guys. So yippee!